Hi, I'm David Penn, Research Analyst with Finovate. We're here at Finovate Fall 2023 at Times Square, New York. Joining me is David Snitkoff. He is the Senior Vice President of Growth with Acrolis. Thank you for joining us today.
Thank you for having me.
Fantastic. I thought before we began, maybe you could tell us just a little bit about the work that you do at Acrolis.
Sure, so Acrolis is an AI-driven document automation platform that powers the online lending ecosystem. So we work with consumer lenders, small business lenders, mortgage lenders, and others to really automate their document-driven workflows.
Okay, excellent, excellent. Now we're talking quite a bit about AI and machine learning here at Finovate, just like we are in the entire tech industry. What would you say are some of the biggest misconceptions that lenders have when it comes to bringing AI, machine learning, these sorts of enabling technologies into their workflows?
Well, the interesting thing is in lending, people have been using machine learning in one form or another for decades.
Oh, okay.
So in some way, a lot of stuff has been here for a long time. In another way, there are some new capabilities, but I think one of the misconceptions is that there has to be a lot of magic, that there has to be something that's totally new or totally outside the reach of a lot of institutions. So every single bank, every single credit union, even every non-bank lender is thinking about how can they use AI to their advantage, or will they be missing something? And I think what a lot of people don't realize is you can start using AI tools today. You don't need to have AI experts in your own company, although it helps. You don't need to do incredible innovation internally. You can partner with companies that have already been building AI. Acrolis has been building document automation AI for years and years and years now. We have processed literally hundreds of millions of pages of verified document data. So if you want to get started with an AI-based lending solution, you don't have to build it all in-house. Sometimes you can get even farther by partnering.
Right. You mentioned a couple of things that I think are major challenges, certainly within this space and beyond it. The idea of that sense of having to take a big bite to start. This idea of, oh my gosh, am I going to have to do this all on my own, for example. I'm wondering, keeping those in mind, are there particular challenges that some of the folks that you've worked with have had to overcome in 23? And how are some of the ways that AI and machine learning have helped them overcome those challenges?
Yeah. So 2023 has been a very challenging year for lenders. Higher cost capital, increased delinquency, fraud has been up in multiple different channels. And if you really think about what is the business of a lender, now there's many different types of lenders, many different lending products, but ultimately, business model-wise, they're all the same. They make money on interest and fees, they spend money on operational expenses and cost of capital and cost of acquisition, and they lose money on credit and fraud losses. So you have to affect one of those levers to really matter. And because of increased cost of capital and increased delinquency, what we've seen a lot of lenders focusing on this year is operational expense. How can they have a much more efficient operation? How can they use less human work in doing their processing? How can they make decisions faster, more efficiently? So what the best lenders coming to us have been able to do is say, if I have a document-driven lending process, how can we make sure that we only need to use our own humans when it's absolutely necessary, when it's an exception workflow? So what we've been seeing people doing a lot is automating a lending process, digitizing a lending process, so that they can do it in a very cost-effective way, only using human intervention where it's absolutely necessary.
Right. Now you mentioned things like automation in terms of these processes and so forth. I'm thinking in terms of enhancing the customer experience. How do some of these technologies work their way through so that the customer feels the improvements that are being made?
So I think the bar for customer experience in 2023 is higher than ever. Yeah. Throughout people's entire lives, not even in financial services, they are used to services where they get service very quickly, where it's all digital, where it's all mobile, where it's very easily acceptable, and the switching costs are very, very low. Especially in the US banking system and fintech, it's not very hard to switch between providers. So people will demand a customer experience where they get quick decisions in a transparent way, and where they get the product that's right for them and on the right terms. And so where I think AI comes into being is where people can get recommendations for the right product at the right time, but really more importantly, where a lender, any financial services provider, is able to deliver a process that is fully automated as much as possible, so they get an answer back quickly. Even if the answer is no, having that answer quickly allows the customer to shop around, and that ultimately increases economic opportunity for borrowers.
Right, that makes a lot of sense. You mentioned some of the different levers that lenders have to deal with. One of the ones obviously is managing risk. And one of the things that I know we've been hearing some folks talk about when it comes to AI is the ability of that technology to help them manage risk. Can you talk about that a little bit?
Absolutely. Lending is a funny business because you give the customer your money and you hope to get paid back over time. And it's a business of asymmetric risk and decision making under uncertainty. Asymmetric meaning you lose a lot more money on a bad borrower than you make on a good borrower, and uncertainty meaning it's not possible to know all the information at the time of underwriting that you would want to know to completely forecast what a borrower is going to do. So we see a lot of lenders adopting cash flow underwriting to really try to understand in a nuanced way what are the unique financial dynamics of a borrower. We see a lot of customers using us to process their bank data. When we look at bank statements or digital bank data, we tag all the transactions to try to see, is a transaction revenue, expense, proceeds from a lender, payments to a lender, non-sufficient funds, about 50 other things to really help understand what are the unique financial dynamics of this borrower. So a lender is not making a one-size-fits-all credit assessment. They're really trying to understand the revenue, expenses, the debt capacity, the ability to pay of each borrower individually so they can make the right credit decision at the margin.
Right. I'm thinking maybe a way of wrapping up. You mentioned the analysis of bank data, and I'm wondering if that's one of the ways that some of the lenders who are really starting to catch on to how to really maximize some of the technology, some of the things that they're doing. One, is that true? And if that is true, are there other examples of that kind of thing from some of the lenders that you really think have figured it out, perhaps?
Yeah, so it's a great question because yesterday the demo we gave at Finovate was called the best SMB lender ever, which was the idea of what are the absolute best lenders doing today? How are they using the full suite of capabilities that we offer to have the best possible lending experience? And what are they doing? They're using tools to give borrowers the choice to provide their data either in digital or document form to make sure they have no drop off in their acquisition funnel. They're using fraud prevention tools like what we offer to make sure that if there's any tampering with documents, which does happen very frequently, that they're able to identify fraud before they lose money, before a dollar of capital goes out the door. They're using deep transaction enrichment to understand what bank transactions represent, getting data off of documents, really understanding the unique financial dynamics of the borrower, and then using all this data in concert to develop cash flow aware credit risk models so that they can make, as we just talked about, the best possible credit decision at the margin. And then all throughout, what they really want to do is offer an experience where a borrower can get the right financial product at the right time, at the right price, and with the right structure. And ultimately, I don't think borrowers care if that's coming from a bank, a credit union, a non-bank fintech company. They just want to get the right products on the right terms at the right time.
Yeah, that makes a lot of sense. It's a really interesting time for lending, a really challenging time for lending just from an economic standpoint, but then thinking of all these technologies that are coming to bear, it's really great to have companies like Oculus that are out there sort of helping bridge that gap between some of the challenges in the economic environment and some of the opportunities in the technological environment.
Yeah, absolutely. And look, we work with about 450 lenders today across consumer, small business, mortgage, and more. One of the most fun parts of my job is just getting to talk to all these companies, and some have been lenders for decades, some are huge banks, and some are literally startups who started lending 6 months ago. And it's just great to help them think about how do they just more effectively automate and digitize their entire lending workflow.
Fascinating stuff. Well, thank you very much for spending some time with us today.
Thank you.
All right, and thank you.